Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in Greenville, South Carolina, and you can find all of my contact information in the show notes if you need to reach out to me for any of your real estate needs. And just a reminder, as always, please like, rate, review, subscribe. If you don't know if you've done any of those things, just scroll down your app, try to look for a plus sign or subscribe button, or if there's 5 stars and they're blank, hit the 5-star button. If they're not blank, then you probably already did it. So a few little ideas there. But I appreciate all you guys, my listeners. I've had several people reach out lately that I hadn't communicated with before, tell me that they were listening, and I genuinely do always appreciate that. Like, there's never a time that someone tells me that they're listening to the show that it's just kind of like, oh, that's nice. And you know, that it doesn't resonate with me in some way. It always resonates with me. And I always just really appreciate finding out, because when I first started this show, like, I literally told my wife, I don't know if anyone's going to listen to this, right? Outside of like my immediate family and friends. It turns out actually my immediate family and friends don't really listen much to the show. My dad, when he was alive, he listened to every single episode, and he would, text me little things here and there. He would say, nothing super deep, but he would just say, that was an interesting topic that you talked about this week. Just stuff like that. But I appreciated that, and I appreciate, I think some people think that they're like bothering me when they reach out to me, or, he must be so busy. I don't want to bug him. No, bug me. If I'm too busy, I just won't respond right to a message that's not directly important to work. But I'm going to respond. Okay. Let's just be real. If I get it, I'm going to respond. If I don't respond, I didn't get it. But anyway, all that to say, thank you guys. And if you could just do those few little things to support the show, I'd appreciate that. And if you could use me as your realtor, I'd really appreciate that. Or if you could refer to me to someone as well. My mom, who, usually listens to the show, as far as I know, she was telling me about how her, old realtor in the Myrtle Beach area calls her every few months to say, hey, do you know anyone that needs a realtor in the area? Can you send them my way? I'm not that type of realtor where I'm going to be, calling people up, every 6 months or whatever, and bugging them about, hey, who do you know that needs a realtor right now? But I have the show. You guys are listening to the show. And so I'm going to make that ask here. If you know someone that you think might need a realtor, let me know. Or perhaps you know a realtor that's kind of floundering. They might need some guidance. Let me know about them as well, because I'd like to meet with them and potentially talk to them about joining the team. Which, by the way, brings me to the next point, and that is that I'm doing meetings this summer that I'm calling, jokingly, swinging meetings. And yeah, if you don't get the joke, that's fine. But the swinging is not what it sounds like. The swinging is swinging golf clubs. So I've got the Top Golf Summer Pass. It's good pretty much every day. During weekdays, it's good until 5 p.m. So we would have to do something really prior to 3 p.m. right to start. And then on weekends, it's only good until noon. But I want to have interesting meetings with people, right? It's always fun to get together and sit down and have coffee. But what could be more fun than getting together and, hitting golf balls at Topgolf? And if you've not been to Topgolf, it's tremendous fun. All skill levels. You don't have to be good at golf at all. I'm terrible at golf. So if you're good at all, you're going to destroy me, and that's totally fine. We'll have a good time. Hit some balls and have a nice swinging meeting. So if you're interested in that, let me know. Again, contact info in the show notes. I want to try to meet with a lot of people this summer. I want to do, ideally, I'd like to do, if my schedule permits, I'd like to do 2 Topgolf swinging meetings per week, if possible. But it's got to work with everyone else's schedule, right? And only being during work hours, during business hours, might be a challenge. So let me know if you or someone else could be interested. If you're a lender, not really wanting to get together with lenders right now. I don't need to do that unless you're a lender that has a real estate client that doesn't have a realtor. Then that could be an interesting opportunity for me to partner with you and to see how you work as a lender. So there's a lot of different ways to skin the cat, a lot of different opportunities out there, but those are just a few things that I have going on. Now, I just came back last week from Washington, D.C., where we had the Realtor legislative meetings. I do want to talk about that, but we're not going to talk about that this week. I'll probably talk about that next week and tell you guys a little bit about what happened. I met with Senator Scott, Tim Scott, also met with William Timmons, Sherry Biggs, a few others that I was able to get together with. And then, we had 10,000 realtors there, so I was able to hear some of the buzz and some of the things that were going on at that point. And all of this, the whole thing with Elon Musk and Donald Trump went down while I was in DC, so that was fun as well. I did miss the parade that's getting a lot of buzz right now, sadly. I wasn't there long enough to see the parade. So I can't report back on whether what the media is saying about the parade was accurate or not. But I will talk about the DC trip at some point. It'll probably be next week. But this week we need to talk about the market. Okay, we just got just a day or two ago the monthly indicators, as they're now called. They used to be called market stats. The monthly indicators for the Greater Greenville Association of Realtors, and we're going to dive straight into this. Make sure I pull up the right one because I've got a few of them open, a few historical ones open in addition to the current. So here's the current ones, okay? There's some interesting stuff in here. I'm not going to get too bogged down here, but I want to go through these and discuss everything with you guys. All right, so let's start with new listings data, and I'm pulling up. If you're watching on YouTube, which I recommend, you'll be able to see these, and you also see I'm looking away. That's because I have last month's stats pulled up as well. Okay, so we have now had most months for the past really several years have been seeing new listings data increase year on year. We did have one down month in January, and I think Helene had something to do with that. Helene definitely impacted the numbers in November. And then you had, everyone listed a bunch of homes in December as the backlog from Helene eased up. And then I think, January, then everyone took a step back. There were still some properties damaged from Helene. Those eventually started to trickle back onto the market later in the year. For the month of May, we had an 18.7% year-on-year increase. That's a big number, okay? This is in new listings, okay? So this is newly listed homes. So the number that we had for new listings was 2,683. What's more significant to me than the 18.7% increase year over year from the 2,261 in May is that this is the highest number of new listings that we've ever had since this has been tracked. And it is now the third straight month that we've set the record. March was the highest we've ever had, then April, and now May is the highest that we've ever had. So some very interesting data. And here's the thing. If we follow normal historical trends, there's a good chance that we haven't topped out for the year yet. Now, I tend to think that this will probably end up being the highest new listings number for the year, but it's very possible that it's not. There have been plenty of other years when June or July ended up being the peak of new listings for the year. I tend to think, I think that this is going to be the highest. But if you're looking on YouTube, you can see it is way above everything else. So a lot of people are trying to sell their homes right now, okay? And we've been talking about this for a while. There's more sellers right now than there are buyers. Now, a lot of sellers are also wanting to buy, but there's a lot of sellers just wanting to sell. And that's being reflected in the data here. Just a lot of new listings coming up. Pending sales. This number is always lower for the most recent month than it should be. This is the number of properties in which an offer has been accepted. So these are the number of properties that go under contract. So May is listed as 881, which is way too low. Okay, this number is usually off by about 600. So we're probably going to end up in the high 1400s, maybe low 1500s. That's still going to be a year-on-year decrease, assuming I'm right, from May of last year, which was 1,578. Let's go back to April. Now that we have the revised April numbers, we can see that I told you guys last month, I thought April was going to be slightly low, a slight decrease year on year, or it would be flat. It would be pretty close one way or the other. It ended up being a slight decrease, a 2.4% decrease year on year. So April of 2024 had 1,617 pending sales. That went down to April 25 of 1,578 pending sales. So after a long time, okay, we've had many, many months going back to last year where we had positive year-on-year pending sales. More people than the previous, or more homes going under contract in a month than the previous year. We've now had at least 1 month, and I believe once the May data gets revised, it'll be 2 straight months of pending sales data being down year on year. So again, we talked about the market getting softer. In some ways, it has been getting softer. In other ways, not as much, right? This is one of the ways it has gotten softer is in the pending sales data. Now, as we've talked about in the past, fewer homes are falling out from under contract than what we've had in previous years. That shows up in the closed sales. So typically, if pending sales are down, you would expect closed sales to be down. That's not the case. Closed sales for the month of May were up 9% year on year, up to 1,763. And not only is that a big increase from the 1,617 closed sales in May of 24, but that is the second highest number of closed sales that we've ever seen in the Greenville market. So May had a lot of transactions that happened. And April did as well. April, it was a strong March, a strong April overall. But May really, again, if you're looking at the chart, May just skyrocketed. And I don't think that we're going to continue to see that for the entire year. I think that, my own business personally, I had a lot of closings in May. I've already kind of felt the crunch, the slowdown that we always experience this time of year. So the peak season, what I always tell people, I consider the peak season to be March to May. Now, there is a broader peak season that goes basically through Labor Day, right? You could say March through August. But the peak of the peak season is March to May. Really, April and May are really, really the two most important months. Sometimes March can be thrown in there as well. I think for sure this year we can throw March in there. And we can expect things to start now coming back down to reality and slowing down a little bit, which is the normal seasonal trend. You see every single year has kind of a mountaintop kind of shape to it in terms of these charts, where it peaks out usually around May, sometimes June. Usually by July, we're kind of asleep. Usually July is a little bit of a down month. Then we have a little bit of a bounce back in August, and then it starts to kind of wind down for the remainder of the year. Days on market until sale, flat. An exact 46 that we had exactly a year ago, 46 days on market until sale. Now, this is significant from this standpoint, okay? I've been trying to give you guys, little nuggets, something to hang on all this data on, because I know it's just tons and tons of numbers. What's significant about the fact that this number was flat is that this is the first time in a long time that it's been flat. And again, if you're looking on YouTube, you can see that we've been up year on year the entire year. In fact, going all the way back to last year, up year on year on days on market until sale. What does that mean? Taking longer for homes to sell. Well, May of this year was the first time in I don't know how long. I'd have to go back and see. I mean, it's a really long time ago. Let me see. Let me pull up something. Oh, yeah, no, I'd have to keep going back and looking at like old historical data. But we have to go back over a year at the very least before we have a month where we weren't seeing an increase in the days on market until sale. And so basically, more or less, since mortgage rates started going up in 2022, it's been taking longer for homes to sell. That was actually a good thing. Homes were selling way too fast during the pandemic. We needed some kind of stabilization. The question is, sometimes you don't reach stabilization, right? When you're doing a roller coaster, if you've ever gone on roller coasters, one thing that is, at least for me, it's comforting when I'm going on a roller coaster, and I do like me a good roller coaster, not the wooden kind. I like the harness kinds that do the quick movements. But I'm not a big fan of the ones that are just like straight down free falls or where you don't exactly know where you're going. But there is always comfort in the fact that within just a few seconds you're going to hit the bottom or you're going to hit the top or whatever the case may be, and that whatever that feeling of fear is, it's not going to last for very long because obviously the coaster has a top and it has a bottom, and that's that. The scary thing about looking at some of this data is we don't know where the tops or the bottoms are when the market is shifting. Well, at the moment, it appears like we have brushed up against perhaps the top of days on market. So whereas it's been taking for every year now, for 3 years, it's been taking longer for homes to sell. For the first time, we're seeing in the data that it might not be, right, in comparison to the previous year. So at the moment, if you want a ballpark figure, how long does it take to sell your home? It's 46 days. Now, that's not when you get your money. Okay, that's 46 days until you go under contract. Then it's usually another 30 to 45 days after that before you close. And that's assuming you don't fall out from being under contract, okay? And again, the fact that pending sales are coming down but closing sales are going up, or closed sales are going up, is a very, very strong indicator that not very many homes are falling out from being under contract. So that's good. That means homes are being priced correctly. That means sellers are appropriately conditioning their homes prior to hitting the market. That means that the negotiations in the middle over repairs are happening, and everyone's reaching consensus. So there's a lot of ways to look at this data. Oops, sorry, I hit my mic there for a second. There's a lot of ways to look at this data and come to negative conclusions, but there's tons of positive things to look at in here, and I'd rather focus on that because you can turn on Fox News and get all the negativity that well, actually these days Fox News is a little bit more positive because their guy is in DC. But you can turn on the news, you can turn on MSNBC and whatnot and get your negativity all day. Median sales price. This is basically what we look at when we're trying to reverse engineer. Okay, what is the average price of a single family home in Greenville? This is what we look at, the median sales price. I prefer to look at this than the average. We'll look at the average next. But the median, it's just the middle number. It's usually going to be the most accurate indicator of what the standard home is selling for because averages are skewed. If we have a bunch of $2, $3, $4 million homes that sell, which is not super common in the Greenville market, that can skew the average. Okay, so what's the median? The median had the largest year-on-year increase that we have had in over a year. Okay, the median went up year over year 2.5%. That's significant. Okay, given all that we're talking about. Now, again, May was a very strong month. We might see this recede a little bit. But what is that median sales number? It was 322,900. So if someone asks you what is the average home cost in Greenville right now, basically 323,000 is the answer. That's up, again, 2.5% from the 314,900 that it was in May of 2024. Now, one thing I was looking at here, when I was kind of assessing this data was like, you know what? I'm curious because if you look, we've been kind of bouncing around now for the past 3 years after many, many years of clear upward growth in appreciation. For years, we've been just kind of bouncing around, and we are kind of slowly making our way up. But we've not seen that the normal appreciation that we see in the Greenville market the past few years. And that's to be expected, right? We had artificial appreciation during the pandemic, and we all know that. But one thing I was just curious about, and I think you guys might be curious as well. Whoops. Sorry, I'm trying to change something on my screen here, which will make sense to you guys here in a second. But I wanted to see, okay, so we're at 323,000 roughly. Where should we be, right? If everything were just normal and had stayed normal, we hadn't had a pandemic, would we be at this number, okay? Or would we be less? Or might we even be higher? How did the pandemic kind of skew these numbers? Well, there's an imperfect way of doing this. This is kind of how a lot of analysts will kind of do this, is you basically just look at, when you've got a trend line from many, many years, just look at that trend line and then reverse engineer, just keep the line going until you reach the current year. So I'm going to do that here while you're able to see my screen. And here's what I'm going to do. I'm just going to take basically we came out of from a housing standpoint, we started to see normal levels of appreciation after 2011. Okay, because you had the global financial crisis, 2007, 2008. The housing market continued to be depressed for several more years. After 2011, it started to normalize. So I'm going to go off of the peak month in 2011 and then continue on through the peak month of 2019. And then again, if you're looking on YouTube, you'll see what I'm looking at. And that is that if we hadn't had the pandemic, probably the median sales price right now would be around 280. And it's at 323. So something definitely fundamentally changed during the pandemic. And the question is, was it artificial or not? And I think the data, a lot of people were arguing, even with me, about this, that what happened during the pandemic, that it wasn't going to hold because it was artificial, right? It was just all based on low mortgage rates. It was all based on people going crazy, losing their mind during the pandemic and all of that. The problem with that is that prices haven't come back down to this level. They've not even come close to it. I mean, in the beginning of 2023, in February, we saw prices in the high 290s, but they've almost the entire time since the pandemic been in or not since the pandemic, but at least since 2022, have almost the entire time been in the 300s. They've just been kind of bouncing around in the low 300s. So by this point, I think that we can conclude that the market has kind of stabilized and that sellers, they're just not willing to sell down in this number, in this price point anymore, where it would have been if we hadn't had the pandemic. Sellers have so much equity now, they can just hold on to their home. And so home prices, there's not a whole lot of evidence in the data that they're going to come down, no matter what you or I or anyone else would like to see. Now, what about the average? The average hit into the 400s once again. So if you really want to know what the actual average is, it's 402,777. That was a 3.5% increase year on year. I'm going to do the same little thing that I did here. The same little thing that I did for the median. Take the trend line from 2011 and continue it on. And what that would tell me is that the average really should be probably about, if we hadn't had the pandemic, the average would be about 320,000. And instead it's 402,777. So again, the pandemic fundamentally altered the housing market, making it less affordable. And there's no evidence that it'll ever go back. And if you're looking at this average sales price trend line, it's even more clear. It hasn't had the bounciness of the median. The average has just continued to go up. And again, as I alluded to before, a lot of that has to do with the fact that we just have a lot more expensive homes being sold in the Greenville market now than we had in the past. There's a lot more demand for 1.5, 2 million, 2.5 million, 3 million, and above houses. And that might surprise you, right? So some people just don't realize that there's a market for that, but there really is. And I can show you guys that at the end. Percent of list price received. This is the percentage found when dividing a property's sales price by its most recent list price, then taking the average for all properties sold in a given month, not accounting for seller concessions. This number, somewhat helpful, not the most helpful number, but it can be helpful, particularly when you look at historical trends. It's at 98.6%. That's a 0.1% decrease from 98.7%. So sellers are getting 0.1% less than they, in terms of the overall percentage of sales price, than they were getting a year ago. That's really not important, right? That's 0.1%. That's a rounding error, right? The important thing is that this is very much in line with pre-pandemic trends. So sellers should feel like if they are pricing their home correctly, they should be getting close to, in terms of from a percentage standpoint, the amount that they were getting prior to the pandemic. So that's good. Again, stability, normalization, we love to see it. What we don't love to see is the housing affordability index going down. I've talked about this many times. This number, this is a way to encapsulate three things into one number. It's encapsulating home prices, mortgage rates, and average income for the area, or median household income specifically. And so it puts all of those numbers together and then comes up with a single number that tells you what affordability is. And you want the number to be 100 or higher. That tells you that the median household can afford the median priced home, given prevailing interest rates. And it's, for the most part, has been below 100 for the last couple of years. We did have September 24, it went to 104. That was because mortgage rates came down. Okay, that's the only reason why that happened. But it's down to 93, which is the lowest number we've had since July of last year. And that is a decrease from the 94 housing affordability index that we had last year, last May. So affordability still stuck in the mud. Not surprising, right? Because incomes, they have gone up a little bit, but home prices, we just showed, also have gone up, and mortgage rates are still elevated right now. Now, their mortgage rates are bouncing a little bit, but nothing really substantial happening on that front. So housing affordability is still not what we would like it to be. We would like for the median household income to be able to afford the median priced home. Currently, they can't. Inventory of homes for sale. This number is always artificially inflated. This is the reverse of the pending sales number that I talked about. That's always lower than it should be. This number is always higher than it should be. So let's look back at April. When April numbers came out last month, it said we had 5,681 homes for sale at the end of the month of April. That got revised down to 5,011, which is basically what I expected to happen. It's usually revised by about 400 to 500. That's still a huge increase year over year from April of 24, which wasn't even 4,000. So that was a 26.9% increase. So the number of homes for sale right now, there's a lot more of them than we have seen in a very, very long time. So if you're looking at the chart, don't look at that top number. That top number is going to come down a little bit. But you can see that the next number is basically in line with like 2015, 2014 levels of inventory. There was quite a bit of inventory back then. Now May clocked in again high 6,110. That's going to come down into the mid 5,000s, most likely mid to high 5,000s. That's still going to be a massive increase over the 4,187 units for sale at the end of May 2024. So we're seeing inventory starting to pile up here. And, at what point can we expect for inventory to get to be so much that perhaps that starts to be a drag on pricing? I don't really know. If I had to guess, I would guess maybe in the 7,000 range, because that's where we were during the global financial crisis. Now, in theory, demand should be stronger than it was during the GFC. But at the same time, I would still expect for home prices, for that to be a drag at that point. So let's keep a close eye on this. If we start to get truly into the 6,000s, which I don't think we are yet. Like I said, this data will get revised. But once we start to get into the 6,000s, are we going to start creeping up? Because normally this is a seasonal number as well, but we wouldn't expect to be at the peak yet. We don't normally see inventory peaking until really the second half of the year. Oftentimes inventory peaks in August or September. So we've still got a long ways to go. Would it shock me if we hit 7,000? Yes, it would. But it wouldn't shock me that much. So stay tuned on that. Month supply of inventory. No surprise, this is going up as well. Now, the May number inflated because we're dividing. This number divides total inventory by pending sales. Both those numbers are wrong. As we've already said, they'll get revised. So looking at April got up to 3.6 months of inventory. This is the highest that we've had since the pandemic. That was a 20% increase from April of last year, which was 3 months. So what does that mean? That means if no new homes came on the market, it would take 3.6 months for all of the current inventory to get absorbed. Now, traditionally, that would still be considered a pretty hot seller's market. But we've already talked about how there's some conflicting stuff in some of this data. It's not a hot seller's market, okay? It's just that what's happening doesn't make a lot of sense in terms of historical norms. And so we need to really reassess this month supply of inventory. I really think that if we got to 4.5 months of inventory, it would start to feel really soft. And so I'm really tracking this a lot more than the total inventory. That 7,000 total units number that I gave out, that was more of a guess. I feel pretty confident that 4.5 months of inventory that we would start to really feel like we're shifting to a buyer's market. So we're at 3.6 the month of April. Now it said May was at 4.6. That's definitely going to get revised down because last month, April came in at 4.3 and then got revised down basically 0.7 down to 3.6. So we can expect for May to be probably in the high threes, 3.9, 3.8, 4, right in 3.8 to 4 months of inventory, okay? So we got to keep tracking this because, like I said, if we start to see this go into the mid to high fours, I think that we would start to see some softness in some of the other data, and really see potentially even prices coming down. Now, don't expect prices to come down. I'm just saying that that's something that we could see if the month supply of inventory continues to soften in the way that it has so far. Now, I told you guys that I was going to reference the increase in homes that are on the expensive side of things that are selling, and so yeah, that's exactly what we're experiencing. I've talked about this before, but in the $750,000 to $1 million price point, that went up 16% year on year. We had 508 of those sales in May versus 438 the year before. And we had a slight increase in million and above. We had 477 sales, million and above, 475 the year before. So that's what's pushing that average sales price up. It's those more expensive homes. There's more money in the Greenville market right now than a lot of people realize. And there's people that are looking for those 750 and above properties. And I don't see that changing anytime soon. Because we've got what people used to call the one percenters. Remember that was a really popular term. The one percenters, they're here in Greenville, and they didn't used to be here in Greenville as much, but now there's quite a few of them here in Greenville, and they're driving a lot of this. You might call it luxury housing. You might just call it expensive housing. I don't know what you want to call it. But they're driving that and pushing up the average home sale above 400,000. But remember, the median is really what we need to base our analysis off of. That's at roughly 323,000. And so if you ask me, what is the average home in Greenville cost? I'm going to tell you basically 325,000, something like that. I think that that's the most accurate way to go. So hopefully that was all helpful for you guys. We will talk. I've got a lot of great content. I've got some good interviews coming up that I'm really excited to share with you guys. Hope you enjoyed all of the content while I was gone. Got you guys some different stuff in there, some stuff that I hadn't done before. So hopefully you enjoyed that. Please let me know. Give me some feedback. Shoot me a text. My contact information is in the show notes. Shoot me an email, whatever the case may be. Let me know you're listening, and please don't miss future episodes. Like, rate, review, subscribe, all of those good things, and we will talk again next time.